think you might find intriguing. Okay, so we're right now, I'm looking at, can you see the screen? Yeah, you should be able to see my chart, right? You guys still there?
Yes.
Okay, good, good, good. All right, so this is Nas, right? And this is the daily chart. So basically, if you look at Nas, 9:30 is when you want to do the 9:30 open AM New York session is when you want to do the 1 minute trade. Okay. Because it does a huge pump and dump at that particular time. It does a huge gap up or a gap down. And if you can catch that gap, you can get in, make a quick profit, and get out. But if you catch it wrong and you pick the wrong direction, it's a good way for you to blow your account at the same time. So you really gotta, you know, plan it out correctly. And so 9:30 a.m. Monday through Friday for the New York Open for NAS. So there's a 1 minute strategy at 9:30, and there's another 1 minute strategy at 3:50 p.m. Okay, so mark that on your calendar there, your notes, that at 9:30 and 3:50. So if you're around the charts at 3:50, you can anticipate a gap up or a gap down. It's been phenomenal. Sometimes I just catch a couple of quick pips and I'm out and I'm happy. But again, if you catch it going the wrong way, you'll be in drawdown and negative and things of that nature. It happens so fast you can't even blink. It's amazing. Okay. So for example, if I go here and I go to the calendar and I put Friday at 3:50, let's see if it'll let me do it. Okay, let me change the time. Custom range. This is the time. Huh. There we go. I don't know why it's not letting me put in the time. Is that for paid members, you think? I need to be a paid member. But usually it lets me put in the times, but okay, we want to do that. Let's see if I can find it with this here. Hold on. Vertical. And it's only giving me the date, but it's not giving me the time. Interesting. Let's try 4 hours. Okay, so let me just show you guys a quick strategy that I've been using that you might find intriguing. If you go to the daily, take this off. What I want you guys to do, or what I've been doing, is looking at the previous candle, the day before. Let's say this is Friday's candle. This is Thursday's, this is Wednesday's, Tuesday, Monday. Okay, so you take the candle before Friday, let's say Thursday. Okay, and you're going to take your horizontal line, horizontal ray, I should say, put it on top of that Thursday's candle, and you're going to put it on the bottom of that Thursday's candle. So that's your daily range for Thursday, right? So if you drop down to the 4 hour, we're going to take a look to see, because it's 8 candles. Well, 1, 2, 3, 4, 5. There's 6 candles. 6 times 4 is 24. So there's 24 hours in a day. So these are 4-hour candles, right? Okay. And what you're going to be doing going forward, if you want to back test this, is take a look at, and I put period separators, okay, on the chart to let me see, like, every 6 candles, I want them to separate so I could take a look at the chart going forward. All right, so if you look at this range here, this is 24-hour range. okay, we were coming off these highs right here, okay? But if you were to put in, let's say, a box from the top with these candles all the way through, you'll notice that it's in a consolidation. Number one, this is a consolidation. It's touching the highs multiple times. It's not breaking the highs, okay? And then there's a reversal. It dropped, okay? Why? Because there was a doji candle right there. As you can see, that doji candle indication is going to be a reversal. And what did it do? It actually reversed, okay? But first things first, what trend are we in? Are we in an uptrend or downtrend? So if you go back to the daily, okay, and you pretty much take a look at the whole range here, right? I like to look at the range by clicking on line chart with markers. Okay, as you can see, we're in an uptrend. Okay. All right. Now, if we're in an uptrend, a couple of things we got to pay attention to. We take our candle, our arrow, stretch it all the way out. You can stretch it out like over here, like 1, 2, run it through. Trying to do like from here, stretch it out. Okay. So here, right from here on up, it's all an uptrend, right? Now, there's a point where it would be a reversal for a downtrend. And what I do, is every time I see a dip or reversal, I'm going to put a line there. There's a dip here, a dip here, a dip here. So these are all reversal dips, right? A dip here, a dip here, and one right here, one right here, one right here. So I put a line on every one of these dips right here. Okay, I'm paying attention to these lines because if any one of the reversals or retracements close below any one of these lines, beyond the trend line, there's going to be a reversal for the downward trend. Does that make sense? If you're muted, you can unmute.
Yes, sir.
Okay.
Yes.
All right. Oh, we got Shelly's on here. Hey, Shelly. Sheila, is it Shelley? Am I saying that right? Sheila? Sorry. Not good with names. But you're muted, but I see you're on here. So welcome, welcome. It's been a while. Appreciate you jumping on. And correct me if I pronounce your name wrong. I want to make sure I get it right. But you're muted, so you can always unmute yourself. But so yeah, so what is the closest line here? This line, if you look at this retracement here, this is the closest line here. And there was almost a break, right? The candles almost closed below this line, right? But almost got real close to the trend line. Okay. This is the trend line. These are just, reversals, right? But then it hit this line, we can call it support, bounce off the support, okay, and continue this climb higher. Okay. Now, another thing I do is I place lines on top of the peaks with a different color. Okay, so if I changed it to white now, I'm going to put, this is Black. So my peaks are what? Okay, we start from down here. There's a peak here. Make it white. So every peak that I see, this is a good thing to do. This is with the dots because they could tell you where your peaks are. Okay. So that whenever there's a higher high, right, I'm putting a line there. Okay. So these are all higher highs. Okay. Now, if I were to, let me show you guys something real quick. Okay, so uptrend looks like this with a small reversal, creates a higher high, small reversal, higher high. That's an uptrend, right? Because this is higher than this high, and this is higher than this high. Okay. Now, what you see is there's a couple of things you need to pay attention to in the trend. Okay, in this particular trend, the reversal came into the range. Okay, came into the range and never, pretty much never closed below the lower low. Okay, so as long as it doesn't do that, you still have an upward trend. Okay, all right. Okay, so when it goes into your range, that's one way of looking at the trend. Now, there's another way of looking at the trend. Okay, come on. Ready to go. Okay, here we go. Up. Nowhere, it never really comes into the range. And all it does is go up and touches the peak of this area right here. So it'll touch here, right? Bounce off of it and go higher. I don't know, guys, if you ever noticed that. It'll come here, stop right there, and go higher. Okay. All right. So if you had put your white line, it came down and touched your white line and went back up. Came back and touched your white line and came back up. And so on and so forth. Okay. Where in this one, it came up, went into the body, right? The range. It went inside of the actual range and then went up. And you'll find that a lot in the charts where that came into the range. Okay. Came into the range and continued its journey. Okay. So pay attention to these two different types of, trends. Okay. And same goes with the downtrend. It does the same exact thing as well. Okay. So let me erase that. Okay, hold on. Does that make sense, everybody?
Yes.
Okay.
Yes, sir.
All right. I'm gonna delete all this. Okay, so if we look at the chart, we could ask ourselves, okay, is it going to be dipping in the range, or is it going to be dipping at the top of every higher high? Okay, so let's look at that. We have an upward trend. This is a daily again. We have an upward trend. It started down here, right? And it dipped and went up. Dip, went up, dip, went up, dip, went up, dip, went up, dip. So it's actually dipped inside the range. You see what I'm saying? It came inside the range. You see this dip here? It's inside the range. Okay. So can you guys see that?
Yes, sir.
Okay. All right. Okay, so we know this is a uptrend. All right, so now we're going to go down to the 4-hour. And we have our period separators. And we're going to change the lines, because we already know what trend we're in, to candlesticks. Okay. We're at a consolidation here. But remember that red line says that we're in an uptrend. So what we should be looking at are buys, right? But remember I said you need to look for the high of the day and also the low of the day. Okay. And then place your alerts accordingly. So if you had placed an alert for this area here, TradingView, if you go to alarm, okay, you can put your alerts in the alarm section. Click on the plus button over here and just let them know, you know, what numbers, like at the high over here, you see the high. I want to know when the actual trend gets to 15,628.30. That's the high. You put it in here. So you change this number to, 15,628.30, right? And you say crossing this particular price, and you can, create an alert name, say point of interest, right? You put point of interest, because that's aware point of interest, because you're interested in that area. Okay. And then it'll either send you an email or sending you a text message. I think if you're a paid member, that'll send you a text message. But if you're a free member, it'll send you an email. You just say once. Okay. Everything's set. You click on create alert. And then when it gets to that number, 15,628.30, you create. And now you can go about your day. You can say, okay, it's going to text me or email me to let me know that when it gets to that particular level, I need to look at it, right? So if you were anticipating this right here, you could say, okay, once it gets to this level, I'm either looking forward to continue to climb higher, or I'm looking forward to reverse. Okay. Based on this box that you see here, it did it consolidated, and then it did a reversal, right? A retracement. Okay. So now if you use your fib, okay, if you use your Fibonacci tool, which is this tool over here, you stretch it from the bottom of the low. So we had a black line here, which was one of the lows. So you can go from here all the way up to the top where this box is. Okay. And you anticipate either it going to 61.8 71.0 or 79. So it's a little bit too far because I need to bring it up a little bit to this particular line right here. Okay, so one of this black line right here was one of our support lines. So as you can see, it came down and hit, or was between 61.8 and 71.00. These are key levels in the Fibonacci tool that once it hits these numbers here, it'll bounce off and continue to climb. As you can see right here, it bounced off these levels here. These are key levels off the retracement levels that you can actually anticipate getting into the trade for an upward, for a buy, for being bullish. Okay, so this is another indicator that you could use your Fibonacci tool, because now you're just waiting for it to continue to climb, because eventually it's got to create a new higher high to break these levels. Okay, got to create a new higher high. Now if the zoom ends, we'll set up a new zoom. It's giving me indication I got 10 minutes left. But yeah, so this is one way of looking at it. Okay, now the period separators, delete this, is key to your success, because every one of these 6 candles is a day. Okay, so if we go to the daily, and we changed it to Wednesday, right? This is Wednesday's candle. I'm going to show you something. Change it to Wednesday. Go back to the 4-hour. Okay. This is the 4-hour. And you can see that there was a consolidation. And then within this particular day is when the actual retracement started, right on this candle. So right when you saw the doji candle, okay, if you wanted to get in on a retracement to the 61.8 or the 71.0, you could have caught all these pips with a stop loss right above the high, okay, and your TP below, and you would have gotten a ratio of, if you entered here, put your stop loss right above the high here, you would have got a ratio of 1 to 2.4, 2.5. Let's see if it, yeah, you would have won this trade if your ratio is 1 to 2.5. I tend to not to be too greedy. I don't want a 1 to 5 or 1 to 10. 1 to 2.5, 1 to 2 is a really good profit ratio. If you set low levels like that, there's a good chance you get the trade. And as you can see, it really never hit your stop loss. So it just pretty much went down to your TP, which is your take profit, and you would have made money on this trade. Okay, that's on the reversal. Okay, so as soon as you saw this consolidation, there was a breakout out of the box with this huge candle right here. You could have got in, which is a bearish engulfing, right? Because you got the doji, remember the candlestick Bible, the doji, bearish engulfing, and then you take these just write it down a little bit. But now it's an uptrend, because it's got to come all the way down to this trend line, and it's got to go below these support levels that you put in here for it to be a reversal. Okay, so if it never goes below the trend line and never goes below your support levels, look at taking buys. Okay, all right, so does that help you guys out a little bit? Gives you a little bit more clarity?
Yes, sir.
Okay. All right. So let me ask you, what did you got most out of it? What you like most? And you
The
guys,
fact that
go ahead.
I like the fact that I can just look at the previous day's high and low
Mm-hmm.
and kind of judge where I should be from the next day going forward based on, whether it's a sell candle or a buy candle. Oh, and the fact that it's in, say, for instance, if I just want to scalp, but
Mm-hmm.
it's in a buy trend. So I always am thinking, no matter what, I'm in a buy.
Right.
And I love that.
Mm-hmm.
And
Mm-hmm.
without indicators, it's wonderful. Thank
Mm-hmm.
you.
You're welcome. You're welcome. So if I clear everything, because the great thing about these period separators, like you said, you can anticipate things happening. Okay. Because I mean this is like 1, 2, 3, 4, 5, like a whole week, right? Friday, Thursday, Wednesday, Tuesday, Monday. So this whole section right here is a whole week. Okay.
Hmm. Choppy.
Yeah, exactly. Exactly.
Hmm.
You know, because if we know it's going to continue to rise, we just got to know where the fib is going to, if we put the fib on top from these lows here, right? If we put the fib like on these lows here, this area, all we do now is just wait. Wait for the key areas to be hit. These three numbers. Okay. And yeah, all you gotta do is wait. You see,
It's
this
like
is
holy grail.
yeah. So
Hmm.
this whole area is a support area. So you want to put it on support,
Hmm. Hmm.
right?
Hmm.
And look at that. It bounced off these areas. These three areas right here, three numbers are most important numbers in the fib.
Hmm.
Okay, now if it breaks below any one of these numbers, yeah, it's now it reversed. It's pretty much do not take a trade, or you see what I'm saying, until it bounces off that trend line.
Okay. Hmm. Hmm. I
Okay,
understand. Hmm.
awesome, awesome. Okay, so I mean, I've been doing this, and I've been successful at some of my trades. And the free challenge, you guys can do the free challenge through. I put a link in the chat. They do a free challenge once a month, $100,000 free challenge, and first place gets $7,000 in cash and a funded account.
Nice. It's a great way to measure yourself and keep abreast of things. So yeah,
Exactly,
I'll do it.
definitely. So yeah, you can go to that site and sign up for October's challenge because we're right in the middle of September. But yeah, you could register
Right.
for October and then register for November, December. It's free, so you can definitely, with all of the stuff that's going on with funded these companies. I don't know if you guys seen the YouTube videos. My Forex funded or funded Forex, the
Yes.
the government sees their accounts. It's amazing. Like
Yes.
what? Wow,
Yes.
wow, 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 wow.
I'm a little perplexed about funded accounts at this point.
Yeah,
I just stick with Apex
right. Okay.
and futures. That's kind of what I know is going to be there, and they're right. So
Hmm. Now you
this,
notice I only did the daily and the 4 hour, right? I didn't drop down from the daily of the 4 hour because this is more like, I mean, if you stayed in this candle, that's 4 hours long. That's like a scalp, right? Not a scalp, a swing trader or day trader.
swing, yes.
Yeah, because this is a 4 hour candle. These are all 4 hour candles. Now, if you drop down to a 15 minute, you want to look for entries, right? In the 15 minute, you want to look for entries. Okay. This is Friday. This is Thursday. All right. And you can label it too. I mean, you could remind yourself by typing the day of the week based on these period separators. And you get the period separators if you click on the right mouse, click on settings, and you'll notice period separators right here. Panel separators. No, that's panel separator. Which one's the period separators? There's a link here. Let me see symbols. Where is it? Okay, so it's at the high to low. We can do that. Where's a period separator?